It's a pleasure for me to be back here in Dubai and to be given the opportunity to address such a distinguished group of participants. Ladies and gentlemen, the Islamic finance sector has seen fast growth and is a force to be reckoned with, especially in the OIC countries. Islamic banking penetration is on the rise, notably in the GCC, while Islamic finance overtook conventional loans in Malaysia in 2017 as the growth driver of the domestic banking system. Indicative of the sector's growth is that Islamic banking penetration in the GCC has increased from 31% in 2008 to 45% in 2017. Islamic finance has moved beyond the core hubs of the UAE and Malaysia to include new entrants as governments seek to bolster financial inclusion from East Africa to Central Asia. The issuances of Sukuk continue to gain momentum, with Standard & Poor's projecting total Sukuk issuances in excess of US 105 billion by the end of 2019. Islamic investment platforms are being developed that utilize fintech from the world's first Shari'ah-compliant robo-advisory firm to the first Shari'ah-compliant gold platform. A fast-growing sector, the Islamic finance industry was estimated to be worth US 2.4 trillion in 2017 and forecast to grow by 7.7% CAGR to reach US 3.8 trillion by 2023. Ladies and gentlemen, what is the next phase for Islamic finance? Whilst efforts are being taken to harmonize and standardize regulatory approaches, where does it grow from here? The growth of Islamic finance in the future will be driven by three key elements. Firstly, the growth in the global Muslim population from 1.8 billion in 2017 to an estimated 3 billion by 2060, representing more than a quarter of the world's population. This is further underpinned by a younger median age of 24 versus 32 for the rest of the world as of 2015. Secondly, notable investments are being made within the Islamic economy, where currently the present levels are significantly lower than its conventional equivalent. And finally, a growth in Islamic trade arising from the demands for lifestyle products consistent with Shari'ah principles. Beyond Islamic finance, the growth of the Islamic economy is gaining momentum. We are seeing growth in halal sectors, comprising food and beverage, travel and tourism, modest fashion, media and recreation, as well as pharmaceuticals and cosmetics. Ladies and gentlemen, the growth of Islamic finance moving forward will be closely linked with the growth of the halal economy. In the centers of the Islamic economy, such as the GCC and ASEAN, specifically Malaysia and Indonesia, it is being driven by both at the policy level and supported by market participants. Concerted efforts by governments, regulators, and industry participants will be required if we are to make this a reality on a much broader basis. Based on the Salam Gateway 2017 report, Islamic trade finance represents only 1.5% of total global trade and 5.5% of OIC trade activity. Ladies and gentlemen, on that note, thank you very much for your attention. I look forward to our fireside chat with Mr. James King and His Excellency Mr. Abdulla Mohamed Awar, CEO of DIEDC. Thank you.
Thank you very much, Rafique, and thank you both for joining us today. That was a very interesting presentation, and I think, in terms of the Islamic finance sector today globally, that story has been so impressive in terms of how it's grown over the last 2 decades and where we stand today. Do you think that, taking stock of where we are now, that the industry as a whole is beginning to mature to an extent, and that we're seeing that the growth rates slowly and gradually converge with sort of the conventional financial sector?
Okay. Thank you. Maybe I can break the question into 2 parts. Firstly, what I say is that in terms of the initial development for Islamic finance, it's been focused domestically, depending on where the regulators are, depending on the environment that's being created for Islamic finance to actually grow, and the number of participants that you have within those domestic economies. What is more interesting now is once some of the Islamic finance industries in those economies start to actually mature, then there's a greater push for some of these institutions to actually go out. And the ability to actually go out must be premised on a strong foundation that they have actually built in their own home country. And I think that's quite important, because beyond just doing it well in your own home country, you need to be able to actually integrate what's outside. And I think that would be the next interesting challenge for Islamic finance.
Okay, well, that's interesting, because you mentioned in your presentation sort of the two co-hubs, the GCC and
Yes.
Malaysia. And this is an interesting point, because we have two very sizable Islamic finance markets which perhaps haven't integrated as well as they could have done historically. Is that going to change, do you think? And what's been holding back the integration of those markets?
I think it's a natural progression. It's a journey. Initially, say for example, in our own experience, we needed to be strong in our home country, which is Malaysia, and then subsequently we have introduced a similar model in Indonesia. We have a presence in Singapore for Islamic finance. We have done transactions all the way to the UK, for example, one in the US. We have done transactions in Australia based on Islamic banking principles. So there is a certain level of acceptance for Islamic finance, but the key challenge is how do we link the two regions which are dominant, which are leading the way when it comes to growing Islamic finance, and beyond that, the Islamic economy.
Okay, so it's a work in progress. And
it's a work in progress, and I think sessions such as this is an opportunity for us to actually engage and share ideas and work on a collaborative model where both can actually equally benefit from the interaction.
Abdulla, I'll come to you here and perhaps just reference Dubai as, you know, clearly the GCC region's leading Islamic finance hub. You know, what role can Dubai play in terms of pushing this agenda forward in the coming years?
Thank you, James. Well, as Dato Mohammed alluded to, I believe we look at it from two folds. One, which is kind of the inward, I would say, view in terms of expanding that sector and how much it's contributing to the economic ecosystem in Dubai and of the UAE. But the other half, let's say, is about what we can do to develop the sector globally, the industry globally. I believe this is where a lot of the collaboration can happen between like-minded jurisdictions, like-minded stakeholders such as Malaysia, in terms of expanding the potential of the sector itself, how to increase the size of the pie for Islamic finance when compared to the conventional finance universe. I mean, the figures that Dato Mohammed maybe mentioned in his speech earlier on are a good indication of the fact that the sector is growing. As a standalone sector, it is growing. But is it enough growth when compared to the financial universe? I think the answer is no. You know, whether it's the fact that the size today in terms of the Islamic finance sector stands in terms of assets of value, I think it stands somewhere close to $2 trillion US. The potential for it in 2023, according to the statistics, show that it could be up to $3.25 trillion US. I do not think that sufficiently describes the potential that the Islamic finance sector presents today. I believe in terms of unleashing that potential, it can only happen through collaborations. Collaborations that maybe do not exist today the way we would like to see it, because of the fact that you have your own captive markets, captive consumers in your own jurisdictions, whether it's the UAE, whether it's Malaysia and others. But B, also because of the differences in terms of when you probe into the details, you find the differences in terms of the standards for these Islamic finance products. So perhaps the way to go about it is to try to find solutions in terms of harmonizing these standards when you talk about the Islamic finance sector. Now, with doing that, I think, and succeeding in that will open the door and pave the way to the development of the Islamic economy sectors, whether it's the halal industry, the lifestyle sectors, and so forth.
Okay, sure. I'll circle back to the point on the wider Islamic economy in a short moment, but I just wanted to ask you, in terms of that collaboration issue that you raised, we were talking a little earlier just about the potential for higher Shari'ah authorities in some markets to down the road, communicate with each other and to perhaps advance a common framework or a common agenda forward, moving forward. Today we see global standard-setting bodies like AOFI and IFSB, for example. I mean, I guess the direction of travel is encouraging here, but more can be done.
I agree, James. More can be done, but it should be also within the mandates of these bodies. I mean, if we take UAE, for example, ironically, it's been very recent that we have set up in the UAE a higher Shari'ah authority for financial services. But it came at a very opportune time. It came at a very needed time because the authority will definitely act as a reference point for Islamic finance products and for the Islamic financial institutions here in the UAE. But it also should focus on, in terms of collaborating with other authorities, central Sharia boards and authorities in other countries, to create that type of synergy that I mentioned earlier. Passportability of products, mutual recognitions of standards. The more they do that, the more they explore that, the better it is, in my personal opinion, and the better it will be for consumers eventually. So we have been successful in the UAE, albeit on another sector, not the Islamic finance sector, to create a forum where that collaboration happens or that harmonization of standards happens. Sorry, I don't know if this was me or not. Maybe because of my excitement. When it comes to the halal industry, for example, we created a forum that focuses on harmonizing the processes and the standards that accreditation bodies use, the halal accreditation bodies. We started that project with 9 countries in 2016. Today, over 32 countries are being represented through their halal accreditation bodies, and what their job is to try to harmonize the processes that they will use to accredit certification bodies. And that's the first step to open the door for international halal trade. I think the concept could also be applied in Islamic finance and Islamic finance products.
Okay, sure. That's the way the industry will move forward through that kind of collaboration.
Absolutely.
In the coming years. Rafique, let me ask you, just in terms of your presentation, you did touch on sort of the 2 growth drivers of the industry moving forward, and you mentioned obviously the Islamic economy, but you also touched on demographics,
yes.
Which I think is a very interesting point because you see these very large markets around the world, Indonesia, West Africa, South Asia, that are largely underserved by Sharia compliant financial institutions. In terms of that particular aspect of the growth story, how is that going to progress forward? Is it going to be a case of large Islamic banks from more mature markets pushing into these regions, or will it be more of an organic process of these markets developing their own expertise and institutions?
I think maybe, James, just to illustrate that point, maybe if you give me the opportunity to actually tell a story about it, because when it comes to pilgrimage to Mecca, it affects all Muslims who are in a position to actually be able to afford it. And in the case of Indonesia, for example, we have actually introduced a product whereby the young consumer or the young customer can actually save for that particular trip, right? So if you introduce the product with the view that at some point, once they have actually saved enough and the money is invested in a Sharia compliant manner, then that trip for them is a possibility, right? It is something which appeals to, say, for example, we found a younger generation in Indonesia. In Malaysia, for example, there are institutions for it, right? But still, there needs to be Sharia-compliant investments for these funds, which are intended for an identified purpose when they actually need to actually use it. So in the space of the halal economy that Abdulla mentioned, there's a lot more that can actually be done, because once you mobilize these funds, whether you invest it for the time when they need to use it. So we found that, for example, if you need to go and perform your pilgrimage or your umrah in Saudi, we will not necessarily have natural Saudi riyals. You can partner with the Saudi banks to allow, say, for example, pilgrims coming from ASEAN to access either the ATM machines or some of the branches in order for them to actually withdraw Saudi riyals for their use whilst they are there, right? And for us to actually build a similar infrastructure would be costly, would be ineffective, and we will not be able to actually reach out to the wider audience. So I think this collaborative model can take many shapes and forms. And it's, I think, limited by sometimes our own imagination in terms of how we want to actually introduce a product that must, in the first instance, meet the customer's requirements.
Okay, I mean, I'm going to turn to a couple of questions just from the audience as we're running a little bit short on time. Let me just ask you, what needs to be done by Islamic banks to clear the perception around them being more complicated and more expensive relative to their conventional peers? I mean, this is a common perception of the industry in terms of both expense and complication. Is that an issue for you, and how do you address it?
It started out that way. It started that way, but I think there needs to be an agenda item whereby reducing complexity, simplifying how you want to engage your customers is a priority. Because ultimately, for the customer, is whether the terms are fair, whether the pricing is also competitive. Beyond that, when it comes to the documentation, someone needs to take them through in terms of what is in the document in a manner which is simplified. If you put it into legalese language, then even if it's a conventional instrument, you find that the customer will actually be put off. So it is an ongoing agenda item, but by and large, we found that in markets whereby the environment is more conducive, we were able to actually sell the products not just driven by faith alone, but because the products itself were able to compete against the conventional component.
Okay.
Yeah.
Abdulla, just a question for you here. In terms of, someone's asking here, do you agree or disagree that Islamic finance can be better promoted if it was segmented more effectively or more precisely? I.e., you could promote aviation Islamic finance or sector-specific offerings in that way. Would that be a better way forward for you, do you think?
It would certainly be, but it's not only limited to, I think, segregation, or focus, maybe trying to identify a niche, component and go with it. But I believe, as I mentioned earlier, it's a combination of factors. If today, maybe your earlier question as well about what Islamic banks can do, I think if you look at the sector, who are the stakeholders that can unleash the potential of the industry? It's not just the banks. It's the banks, it's the governments, it's the bodies like those higher Shari'ah authorities, that I mentioned earlier, by paving, the way for harmonization, passportability, of products and others. That way you can unleash, the potential of the sector. Certainly from a demand perspective, I believe the demand is there for utilizing Islamic finance products. But if we are not providing a level playing field between Islamic finance and the conventional finance, then of course the consumers will go to utilize conventional products. To be very honest, my personal opinion, I mean, what's the difference between an Islamic bank and a conventional bank? If it comes to the core Shari'ah, let's say, aspect of those products, perhaps 10% of the offering of an Islamic bank has to do with that technical Sharia aspect. The rest, they compete with conventional banks on other things like customer service, ease of access to the products, relationship management, and other aspects. So it's not really that different. So if there is today an obstacle on Islamic banks that they are not provided with that level playing field, if the regulations of any country or any jurisdiction makes it difficult for consumers to take or utilize an Islamic bank versus a conventional product, then the majority will go to the conventional side. So all the stakeholders, in my opinion, should be involved, not only the banks or the private sectors. And this is the path that the UAE has taken with the formation of a higher Sharia authority, giving them the mandate not only to develop the Islamic finance sector here, but also have an outward-looking perspective in terms of collaborating with other jurisdictions. It's certainly on the right path.
Okay, fantastic. Well, on that point there, we are actually out of time. It's gone very quickly, but thank you both for joining me here today. And that concludes the panel for now. Thank you.
My pleasure. Thank you.